The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour, and I'm just about to do a little chart here. This is a 2-minute chart because I had a question from someone. The question was, does the Chapman wave work in all different time frames? And now I've got a 2-minute chart, and I'm just going to show you, yes. Look, if you take the E-minis right at this particular moment, trading at 1764.25, look at this. You see that low? Well, first of all, the low of at 7:46 on the 6th of, what's the date today? Today's the 6th. 7:45 this morning, it went peak A, and then it's A minus because it restarted and went to A, B, C, peak D. That's the objective, to get you to D, 1754.75. It pulls back. It pulls back to 1744.25. It goes peak A, peak B, and all I'm doing, each successively higher peak. It has to be a higher peak. Parallel highs just continue the previous letter. A to B, C, D. But then I have the technique that I call the instant restart. And there's a whole chapter that I have in my book, introducing the Chapman wave methodology. And the instant restart has a section, this is somewhere around there, 19. And it discusses what happens, how that the sequence of going to the fourth highest peak and then very quickly going to the next high, which could be E/A, could continue the previous buy mode, or it could be a brand new one. And that can take you to a whole new peak D. Oops, camera off. Let me just do this again. I don't know how that happened. Let me do that again. Oh, I don't even know where it was off from. Going, oh, there it is. Okay. And here we are. So, let me just do it again, just in case I'm not sure where, whether you saw this. Here we go. From the low bar on the E-minis, on the 6th of February at 1744, you had 4 successively higher peaks to a peak D. That's the objective of the Chapman wave, the core objective. And it goes to 1754.75 at 8:32 on the 6th. That's this morning. Pulls back sharply, and it goes all the way down to retest that previous low. It went to 1744.25. This is a 2-minute chart, remember? Goes to peak A, B, C, and then it goes to D. D has this little cluster pattern holding this 9-period moving average. I'm just going to, what color can I make that? No, I think that's good enough. That maroon line. Let me just double check. Chart is showing now. I just want to check to see. We've got it right there. Hopefully I haven't got the sound off here. Sound is off. Ah, there it is. Yeah, nice. You see that line there? That's actually a maroon line. It's a little hard to see. That maroon line there, maybe I should make it thicker or thinner. I don't know. All right, whatever it is. And then there's underneath there's a support line that says, hey, as long as it's above that line, the maroon line is above, that's good. Well, look what happens. You get this technique that I call the instant restart, and that is a special technique. This is chapter 19 in my CD, Introducing the Chapman wave methodology, only available at TFNN. There are 27 chapters, I think. There's that cluster pattern, and it shows exactly, I explained bar 1, 2, 3, how it comes about, what happens, and all of a sudden, it gives you a brand new buy signal to buy mode. There is an alternative count here that should be E/A, F/B, G/C, and then it goes to the D. Finally, it gives you the D, and boom, it pulls back. So now what we're doing, let's go back to our actual live chart. You get, and I always put a little, I do this mostly for people to see. I don't need to do it, but I like people to see. There's that little cluster pattern called the Chapman wave instant restart, and it goes to E, possibly A, it pulls back, and the MACD and stochastic pull back with it, so E would have been valid, but it held the 9-period moving average. Look at that. And that grayish line underneath, that moving average, says, still going up, and it goes A, B, C, D, and yeah, you get your sharpest pullback from a doji candle. That's one of the reasons why I do use candlesticks. I like to see the concept of what the actual the bars are telling you. It's easy to see. I can recognize bars, but you can really, at a visual instant, you can see that doji candle there and that doji candle there. So now what it does, it goes to this double doji. So there's a doji at the top and what I call a silent doji next to it. And that says be a little careful here, because now the MACD is lower than it was at the high of 1766.25. And the stochastic is way low, turning down. But yet the price holds. And finally, what you've got, and this is very interesting, I think, is that even here with the deep pullback in the MACD and the stochastic, look what's happened. The gray line or beige line has held. It's getting really close to flipping over to above the maroon line to say, be careful, because this could be a little bit of a pullback. I'm talking about the 2-minute chart, of course. This is not major, And what did the price do? If you listened to my show earlier, I did Steve's show. Steve had some further problems with his service data. We are captive audiences for our data services. And I must say, I got a call last night from TradeStation. I've used TradeStation ever since they were supercharts back in the 1980s. So they switched over to TradeStation. I was telling Sarah, this wonderful intermediary between the engineers and myself, that I told her, she knows about it. They all know about my problem. They've got a big file, like my medical file. They've been very kind. I mean, they really spent time on this whole thing. But what is most important is I said to Sarah, Sarah, I've been showing my charts for years and years. There are people, I don't even know how many hundreds of people have signed up for TradeStation because they can see how easily I can do the notations and everything. Other services give different things, but I love the technicals from TradeStation. I said, I want to keep using it, but I'm not going to be able to use it if I still have these problems. I'm the only one, evidently, in the big file that they've got that has this particular problem of the price. When I type, it jumps into the symbol bar, and when it shuts down, it goes to a different file, so that although it's saved, it's not my most recent one. So anyway, a couple of things. And I said, your data is fabulous. When I check anybody's data, they always come back to what TradeStation had as the price to go to. So anyway, they've been working very nicely. And thank you, Sarah, for being so kind and taking your time. And yeah, I know that was a 2 million gig or whatever it was file that I sent over to you yesterday, but I'm sure you got the equipment to handle it. Now look what happened. The 9-period moving average right there at 1767. What was the high? 1766.25. It stopped dead on that line, the 9-period moving average. That's going to be a resistance. Look at the stochastic. I love the V-shaped turnarounds. I don't like these flat ones. There's a V-shaped turnaround of the unbalanced volume, that blue line. The MACD is struggling to turn. The histogram still way under the 0% line. I'm just not impressed so far. I love the price movement, but I'm not impressed with the actual technicals involved. So that's what I wanted to discuss. Now let's do the numbers for my show. I did them for Steve, so I'm going to do them for ours. The Dow's up 150 at 15,590. S&P is up 17 at 1769. Earlier on, the Dow was up, I think it was 0.80, and the S&P was up 0.60. Now, and then just a little while ago, the S&P overtook. It was up 1.1, and the Dow was up 1.1, and then the S&P was up 1.3, I think, 03. And now the Dow is up 0.96%, and the S&P is up 0.99%. This is interesting because there was a catch-up in the S&P, a little burst of strength. And now, let's go to the numbers again. So the S&P is up 17 at 1768. Comp index is up 49 to 40.60. Gold is holding so well, but it had a peak D in the GLD. I showed that earlier, and I'll do it now. GLD has made a peak D. The GCG continuous contract has in fact already made the peak D and is pulling back, holding the 9 EMA. It looks to me like there's a consolidation. I drew the oval pattern in, but you can see it a little bit better here in the GLD. That GLD is saying high-level consolidation. Weekly chart has made a peak A and is still acting very well. I'm a little concerned when I go to the wrong chart. When I go to the 120-minute chart, that there's a very strong resistance in the 122s. I should say I'm very concerned. That is the level to pierce. That's all. I don't have to be concerned. It's GLD's problem, not mine. Most importantly, if there is a pullback under 120 to 119.17, I can see a sudden slide to 118 as what? As the dollar goes higher. And the dollar made a peak D in the 120-minute chart, has pulled back quite sharply from that under the 200-period moving average. But it is the daily chart that says, I'm struggling. I'm going in a sideways move. The weekly chart is making the H2 and M pattern until the dollar can decisively break into the 82s. 81.39 was the high. I'm not interested in 81.39. If the dollar breaks into the 82s, I think that gold will finally pull back. But in the meantime, gold is holding very well. The gold stocks are rotating. Some of them, we did NGD for one of our people in the den earlier on for... I think it was Joe. Yeah, Joe in the den. It was for Joe in the den, and that was saying, "Hey, be a little careful. It could pull back here. It's had a great move. Needs a little time to consolidate." So here's the other thing: EUR/USD. EUR/USD. Just need to see who that is. All right, that's not for me. I'm going to leave it. At 80.83, down 21. Don't. Wrong chart. EUR/USD, and this is going to be very interesting. That's a nice pop-up, but it still looks like the euro-dollar currency pair is struggling, or at least trying very much to get to the 200-period moving average at 1.343. Here is what's very interesting. This is the EUR/USD. Now look at this. In the monthly chart, there's a peak D. Nice consolidation. And the monthly chart is the one that really says, you see that inside track, this is the Chapman Wave inside track. What is the inside track? If you go to my CD introducing the Chapman Wave methodology, find, and we're going to go to inside track right here. Those parallel lines, that the red line with the dashed line and the green line with the dashed line, that's called the inside track in the Chapman Wave, and that's the repellent or propellant zone. And you can see it in different charts. All right, well, that's the best one that I can show right now. And in this particular instance, that's the repellent zone that's been there for the euro. We'll be watching that real closely. So I'm going to say that in terms of the euro holding the 9-period moving average, it's really worth keeping an eye on this euro-dollar currency pair because it is holding very, very well. I'll be back straight after this. The Dow is up 136, pulling back a little bit, and I'll be back and we'll be talking about some of the stocks with round number highs.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I just wanted to show this. Sometimes things work out very well, and sometimes they don't work well. I wanted a stock called SPF, Standard Pacific Core. I did my analysis on it. I really liked it. We got in at $8.69 on the third. The third, and that same day it suddenly pulled back and it took us out. We got in at 869, it went to 885, and then suddenly dipped to 833 and closed at 851. So we took a 20-cent loss, and now it is acting very well. It's at 887. But I love this chart. There's a pattern that I call the falling axe, or the breakout pattern. And in my methodology, this is chapter 24 and discusses this particular pattern. And what the pattern says, let me see, this is an easier one to see, that if it does break out to the upside, there's a chance you can get a 1-to-1 to the upside as it takes out the left side high. Well, so far it's acting very well. We aren't in it, and I think we've missed the best entry, the safest entry, and it's doing what I wanted it to do. Evidently came out with earnings. Earnings were good. But also in the cup formation, remember that pattern I was talking about where the H, the lowercase h, has two fighting patterns. Either it's going to break the left side low, or there's a cup formation that forms, and if it takes out the arch high. Well, it's done that, and all it says is that if it starts to take out 916, then the magnet of 975, the 200-period exponential moving average, will become a target. And that's really what I was looking at. But we had, wow, a problem has been detected, and Windows has been shut down to prevent damage to your computer. Good grief. Blue screen. Haven't seen one of those in a long time. Collecting data for a crash dump. All right, I'll just leave that. You know what I found? That doesn't happen very often, but if it does, just leave it. It kind of sorts itself out. It's another one altogether. So that's what I wanted to do because it was brought up in the den. The other one was a question I had from a subscriber saying, unless I'm missing something, my chart shows the Dow under 15,390 for more than 30 minutes from 10:30 to 11:15, which would trigger a buy on the that I wanted on the short side of the Dow, only if that happened. But I made it very clear. I said, if the Dow slides under 15,390, this was yesterday, and holds there for 30 minutes with the VIX in the 20s, buy this using a minus 1.20 stop. And it didn't do that because it kept bouncing up. And that was very strict. That was something that I tried to, in a certain number of words, you got to be as articulate as you can be, and in this particular instance, I thought I was very articulate, but that's basically what I was looking at. Now, let's do this most important thing that I want to look at in terms of. That's right. I don't. Thank you, Al, for giving me that update. We do have people waiting in line. We've got Ari in Arcadia. Hi, Ari. How are you?
I'm doing very well, Basil.
Good. You'd like to look at?
RGLD.
Okay.
I think it's a flat base restart on the daily, and I was wondering if you agree with that.
Yeah, hold on now. Just let me finish putting in. This is Lex C. It's so interesting. Some of the gold stocks have just been in a world of their own, ignoring anything in the marketplace. They've just pushed higher, had modest pullbacks. Our Gold, which is Royal Gold Inc., it's a royalty gold company, trading at $59.35, up 48 cents, went from a low bar. There's that cuff. Oh, there's the pattern that I was just talking about. There's that H successful test, and then the overpowering cup formation takes over. There it is, cup formation all the way through. Okay, let me explain what I've just done. If you're looking at, I'm just trying to shut this down now. Down. There it is. If you're looking at Royal Gold, you'll see that the low, the most recent low, December the 3rd. Yep, December the 3rd at 42.56 took it to peak A to peak B. Then it pulled back sharply, but it didn't go to the low of 42.56. It went to a low of 43.42. There's that lowercase h pattern, and all of a sudden the MACD and stochastic are very positive divergence, and it takes off. It takes out the first left side high of 46.29. And then what does it do? It takes out the high of 48.95 and goes to leg C, then peak C, peak D. And as it's getting closer to the 200-period exponential moving average, which was the bugbear ever since it broke down back on the 28th of August of last year, went from 63.85 to 59.57. Whoa, there's the music. It just couldn't get back there. Well, it got back there. Then what happened is it broke above, went to peak E. Then it turns around and makes that 200-period moving average the support level. And now started a brand new move to the upside with a little doji candle today. We'll talk about that. Hey, I know you're long, so you stay with that, and I'll be right back with Ari and...
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks, we're back, and we are looking at RGLD, it's Royal Gold, and this is what I've got outlined. First of all, the weekly chart. The monthly chart went from 100.71 peak E back in, I think it was October of 2012, plunges down to 38.63. But unlike many of the others which broke the 200-period exponential moving average, this again, like it has for so long since it broke above it back in 2002 in March, ever since then, every time it's come back to above the 200-period moving average. It is acting very well. So when I'm looking at this, Windows has recovered from an unexpected shutdown. I'll figure that one out later. What I'm looking at here in the monthly chart is that last month it closed above the 9 EMA. This month it's above. The month has just barely begun, so we don't want to get too carried away there. But the weekly chart has a W formation. I like that. And even more important, yes, I'm back. Thank you, Al. And most importantly, the candle that I'm looking at is the candle of the 30th of August in the weekly with a high of 67.25, a low of 57.50. We're inside that. I'm suspecting that the 200-period moving average is going to be a little bit of a, it's broken above it. It's going to do a little more testing in the weekly chart, and that's at 58, somewhere around 58.30, and it's at 59.46. The 56.59 level is the 9-period moving average support in the daily, 53.42 in the weekly. Now, what I've done is I've drawn, it's a little too aggressive, I've got a test of the 67.25 high in January. I think I did that a little too quickly. I have to go to the low, from the high to the low, and actually that extends beyond it goes to February sometime. So let me just see if I can do it here. I don't think it's going to go that far. No. Let me just give you 1 second. I'm going to put space to the right, make it 20 just for now, and that's going to say, oops, there you go. Okay. That says that we can go all the way to, if I can see it, I'll have to squeeze it. Here we go. 1, 2, 3. All the way to this is a daily chart, to around the second week of March, that if it's going to last that long, it could go back to the 67.25 area. I'm going to be a little conservative right now, and I'm going to say that the action is really good, but there's a chance that it's going to trade between 60.55 and 56.20 to 55.50 in the next week if two things happen. One is if at any point it slides under 58.20, it's at 59.45 right now, or it'll be very positive if it can break above 60.54. If it can close above that level, that is going to be very positive. Right now, all I can say is it's just a little bit overextended in the daily. I love the chart. You've picked a really good stock. The 120-minute chart is at A, B, C. It's in Doji D. I think it's just a little toppy right now, and there's a Doji candle potential. I love it. What are you planning to do?
I tell you, I have an alternate count than you. I took the low of 130, and so I started a brand new A, which coincides with your B. But I'm viewing it as a brand new AB wave up. So
okay, that's fine.
In the close of January to the open of February is a flat base restart.
Oh, that's the way you're doing it. Okay. Well, then, if it's a flat base restart, it's coming back towards the 53s then, right? When it's done.
No, I didn't realize that. Well,
you mean an instant restart or a flat base restart?
A flat base restart.
Okay.
It was for quite a while. It wasn't an instant restart.
So wait, just let me double check. Your D is on the 24th?
Yeah.
Yes. Okay. If you do that, I think if that's D, A, B. All right. If that's the case, then you're in leg C right now, and a flat base restart says you're coming right back to the low that was established. That's at 53.02 when this is done. It's actually a very positive and then a very negative chart formation. The instant restart, which I have, is very positive because it says if, in fact, you only pull back to 56.55 area and then you make a leg C, you're probably going to go to a D and maybe even E and F. Yeah.
But if you say 130 is the start, it's only a B wave up now. It's building the B wave. If you make 130, the low of 130 is the start of A. See, I don't know.
128, 130. Yeah, that would be B. I've got a high of 56.99 on the 3rd of Feb, and then 56.80. So that's A, and this is leg B. So whatever you do, we're both in the same count right now. We're in a potential B.
That's right.
Okay, so I'm just saying
that'd be an aggressive waveform if it's only a B, because you could buy in the B retracement.
Right, but what I'm also looking at is that it's one of the very better looking gold stocks, and the weekly chart is the one that's the MACD is very strong, and the stochastics at 88%. That to me is saying that the 200 period moving average at 58, around about 58.40, that moving average, if that can remain and be a support level on any pullback, then this thing can go to that candle, and that would be the candle of August of 2013. So, yeah, both, we're looking at the same things. All I'm saying is the most important thing about Royal Gold is you don't want to see a close, and right now you're at 59, but you don't want to see a close under, say, 56 to 55, because that's going to say, it's going to stall a little longer. But so far, it's a great-looking chart. Hope that helps you, Ari. Congratulations.
Thank you. Agree.
Thank you very much for calling. Let's go to Mike in Sarasota. Hi, Mike. How are you?
Good. Hey, I wanted to get your take on the March crude oil contract and confirm. I believe it's in leg E.
So are you looking at the H, right?
Yes.
So now what are you? Crude oil. I went to the wrong one. I'm going to CL.
Yes,
H14. Now this is very interesting. I too have an E, and the MACD is very strong, but not as strong as it was at the higher high. But that's okay because it's still in the up mode. So, oops, I have an F. I'm sorry. I have an F because if you take, I think you missed one. I almost missed it. But if you look at the high of the 15th at 94.82, look, it's 94.78 as a high, the next high. Did you miss that?
I guess I did.
Yeah, if you did. So now what we've got is, this is F, but because it's making higher highs and higher lows, there is the chance that regardless, this is not an instant restart, but this is a chance this could actually turn out to be leg B. And I'll explain why and what it needs to do to be a B. If it pulls back, because the characteristic of the stochastic and the price itself hasn't got anything like an F right now, unless by the end of the day, crude oil trading at 98.23, up 85 cents, actually closes at about 97.41. If it does that, and tomorrow's a down day, then it has the look of a peak F. But right now, it actually has the look that says, you know what, I could have recycled. This could be F/B. So there's nothing to do because are you long?
I bought SEO Ultra short
yes.
this morning, and I was looking at the 120-minute chart, which I believe completed leg D.
Correct. So, okay, so you're actually looking you've got this as a short right now. So the big question is, you didn't want to hear me talking about the alternate count.
Leg D, no.
So let's do this, because you got a nice entry on this. I'm a little concerned, and I'll tell you why. See how that 120-minute chart. It made a peak C1, C2 in the weekly chart, and it's under the 9 EMA. Okay, I can make this real easy for you, because you don't want to hang around if two things happen. One is, if by the end of the day, crude oil closes anywhere above 98, and overnight, crude oil is acting well, and tomorrow it even wants to test the high of today of 98.83, or 98.55, anywhere in the mid-98s or higher, because that's saying, no, there's a lot of strength here. Because as I say, the characteristic of F right now, I don't have that at all. But it has successfully held the 200-period moving average, and it's actually made the 200-period moving average of 96.25 fabulous support. So I'm going to say to you, you can make it real easy. You're in SCO, then you're probably in with a little bit of a gain right now because it's trading at 31.61. So you're in at about 31.55 or 56?
45.
Oh, you're even lower. Then I'm going to make it real easy. Even though it trades overnight, so that's going to make it a little tough. I don't know how because you can't trade SCO overnight, I don't think. What I'm going to say to you is 45. I would make it real simple. I'd make 40 to 35 the stop. If I don't know what your stop would have been, but I'd make it fairly tight because it's acting quite nicely right now. 120-minute chart is not great, but it's acting quite well in this bar. So what you want to see is by the end of the day, 31.70 on the SCO, and that'll give you some comfort and say that the crude oil contract itself is starting to pull back. That's number one. Number two, and this is to me very important, is that in the crude oil, I'm just going to go to USO for the moment. USO right there. Yeah, that's making just a nominal E on the line. I think you might have a very short-term trade. I treat it first as a short-term trade, and then if the do you look at the USO ever?
No, but I will.
Yeah, the United States Oil Fund, that's in leg E right now, and it's on the 200-period moving average. If the USO starts to take out 35.01, that's exactly what you want. If it takes out the upside and takes out 35.20, I'm going to make it a little higher. If it takes out 35.35 and it's trading at 35.04, I'd say be real careful with your position.
Okay, thank you.
So I think your timing is exactly right for the conditions that you've stated, but stops are very important.
Yeah, I'm hoping for a pullback to the low from 3 days ago at 96.80 in the crude contract.
That is a possibility, but I would say it's not a possibility if overnight going into tomorrow morning it's anywhere close to today's highs, because that's indicating this is not a leg F. It's maybe an alternative B, and you might get a pullback, but crude oil is going to go a little higher. So I just wanted to give you that as a warning, but so far you're looking good. I just make a tighter stop. Thanks so much for calling. Good entry point, Mike. Mike in Sarasota. Let's go to Freeman in Dallas. Hi, Freeman. How are you?
Sir.
Freeman, you there?
Hey, I'm here. How you doing?
I'm good. I've got UDXY, but that's not right. What are you looking at?
No, UV. V as in
that's UVXY. I thought that must be. Okay. UVXY. Your question.
My question is, Basil, do you think in the overall market we are in a new buy mode here? And if we are in a new buy mode, if we're not, do you think it's good to go long the UVXY? That means going long the VIX.
Okay. Now, Freeman's got a fantastic question. I did a lot of work last night. In fact, we had hardly any trades this morning because I was so busy looking at everything. I don't like to actually suddenly put on trades when you've looked at tons and tons of stocks. But what I was looking at was, let's just take this question for a moment and look at GE. GE is having a very nice move. It's a counter move. It's just trying to get above the 9-period exponential moving average. In the weekly chart, remember I talking about those channels, the inside track, it went under it and now is above, or at least it's inside the inside track. And if it moves to the high of the day, if it goes to 25.21, it's slightly above that green line. That could be a turn. So it's a really great question. Have we, in fact, had the 7% pullback? Everybody's so bearish. Do you think that the UVXY is now out of favor, even though it's a peak C? It is subordinate to other things. You don't always have to get a D in the sentiment indicators because they are subject to the root positions. That is a great question. Everything about the charts that I'm looking at suggests that we've made a top of some significance, and that I'm not saying how deep we can go down. I'm saying time-wise, and to a certain extent price-wise, we should make lower highs and lower lows. Within that context, if you look even at a GE, a bounce to the recent highs of 25.62 is nothing. It was at 28.09. If you're looking at the S&P, the New York Exchange, which is what I think the UVX. Well, the VIX is based on. The New York Stock Exchange made a high of 10,401. It just dropped down to 9,732, having a very nice bounce under the 9 EMA of 9,940, at 9,915. It could bounce. It could even bounce all the way to the 10,071 level, and it's still a bounce. So I'm going to suggest to you this is a bounce. And when people least expect it, you're suddenly going to get a reversal to the downside, but that doesn't mean to say that it's a smash or anything like that. All I'm saying is I'm going step by step. So Freeman, we've got a break coming up. We've got you, and then we've got Garo on the line as well. I'm going to think it right through during the break to be able to give you a succinct answer, because your real question is, when do I buy the UVXY, which is the VIX 200% long position? And I'll answer that when we get back, okay?
Okay, thank you.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Let's just go through this real quickly because it's a great question. Freeman asked, is this possibly a low of sorts that we can now start to look at the long side? There are some stocks that are acting really well. There are some stocks that I've been wanting all the time, even in the pullback, and have just gotten away from me here. But there are other stocks that are acting very poorly. So I'm looking at this and I'm saying, Freeman, the VIX is right now at 1774. It's a little deeper. It went under the 9 EMA. To go from 1774 to 2148, 3 points. No, 4 points in one session. Boy, the news tomorrow is just going to have to be ugly, and the market has to be down. The futures have to be down about 18 to 20 points for us to even think of the VIX going back to 2150. So, and then it's too late. So I'm going to suggest 2 things here. One is, I don't know if you use options at all, but maybe an option on the UVXY, because it's just the least expensive way to do it. At least you're there if there's a big pullback tomorrow or from later this afternoon for that leg D. But then what happens is if you get to leg D, now you're expecting that is getting close to some kind of consolidation of at least 3 to 5 days. So I don't see it as a play at all. If you were in it now, I'd say that's great because you could put a stop in, because if it explodes to the upside, that's great. But I think the best move has been done from 58.40 to the high of 108.41. That's a 100% move. To me, it's a remarkable move, and I've got a feeling that we might not even see the VIX make a peak D for a little while. So I'm going to say to you, I might be wrong. I'd rather be a little bit wrong and have you not lose money, not make money, than to lose a chunk because you're in a position and then by tomorrow morning you can't do anything until after the news is out, and then you're trapped. I'd rather not be trapped and live another day, because by Monday or Friday after the news is out, we can have a whole bunch of trades. Or Monday. I'd rather do that. So I'm going to say to you, I don't think there's a trade right now in the UVXY. That's number one. And number two is, I don't think we started a brand new move to the upside. It is a rally, but it's not a brand new move to the upside. Hope that helps you.
Thank you much. Thank you.
Thank you, Freeman. Sorry I couldn't give you a better answer than that. Garo, we'll go just a moment here. You're looking at?
MasterCard, sir.
Okay,
I want to know if the bleeding is stopped or not.
Okay. I think for now it's got the chance of a rally that can take it from 74.22 to between 75.75 and 77. If the market holds through tomorrow and actually closes up tomorrow instead of being down sharply, then MasterCard, MA trading at 74.20, up $1.36, could bounce. And that bounce could take it all the way to fill a rectangle formation that my eye sees right now between the low of the day of the 31st, which is 31st of January, 71.75, and the high of 75.69. So on the upside, the 120-minute chart, if you were to use your... Let me just quickly do this on the 120-minute. We're looking at MasterCard. No, you don't. You'd have to go all the way to 77, almost 78 before you got a buy signal, right?
Right.
Yeah,
Absolutely.
I'm gonna suggest, Garo, that you just hold off right now, because if there is an explosive move in MasterCard, it'll be tomorrow, it'll gap up and it'll go straight to the 75 level, and then you could trade it for maybe 2.5 to 3 points. I would say right in this moment, I'd prefer that you just step aside. I just don't see it in MasterCard right now. Hope that helps you.
Very good. Absolutely. Thank you.
Thank you for calling. Folks, let's just do this. I'm going to use both the Dow right now. As we're going out, I've got Larry Pesavento. Oh, just remember, I spoke to... Let me do this quickly. UNG made its leg D. I think that UNG is now going to have a consolidation. And Coffee, KC, is in fact still acting really well, and it's got tremendous support in the 139 area. All right, that's all I'm going to say. I'll be back tomorrow. Stay tuned for Larry. It should be a fabulous show, and have a great day, everyone.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
You're watching Tiger TV.